Hello, everyone. JP here, and welcome to this HUBB AI Founders Forum. Excited to have you all with us tonight. Obviously, it's Founders' first opportunity to get an inside view of the Wave 5. And before we move on to a couple of other things, I'm just going to go through the housekeeping, as you guys are all aware, our risk warning disclosure. So, HUBB Financial is not a registered investment advisor in the United States. So anything that we're talking about tonight should be taken as educational. It's certainly not specialized investment advice for your individual situation. I know you guys are all familiar with this, so I won't spend a lot of time on it. But you know that if you want to go and look at any of the detail here, you can go onto our website. Now, tonight we're going to talk about quite a number of things, but the very first thing that I want to do is bring in Stephen Camp, who I know you guys have a lot of interaction with. Stephen's our Director of Account Services and also runs the AI Concierge. Stephen, how are you?
I'm doing good, JP. How are you doing this evening?
Yeah, really good, mate. Good evening to you. It's daytime where I am, obviously, but I know we've got people joining us from all over. So welcome to everybody. And Stephen, it's exciting to finally have this Wave 5. I know you've been excited to get this into people's hands for quite some time now.
I am for sure. We had so much fun with Wave 3, and as you know, JP, I'm sold just on what I saw with Wave 3. So when you think about adding other signals like Wave 5 and then consecutive signals down the road, it's very motivating to say the least.
Absolutely. And look, there's a lot to cover. You can see I've got up here, Stephen, we're going to talk through the Wave 5 signal setup. We're going to talk through the R&D process and how to interpret the signal, including using that new entry window that we've spoken about. Also, I think probably what everybody's most interested in is the performance. So we've got some really good data on what the performance has been. And then I want to just spend a little time to compare Wave 5 versus Wave 3, because I think that gives some insights. There is some differences there in how we're likely to trade it. And then I thought also really worthwhile checking in on the macro model. And there was also a couple of, I won't say surprise outcomes, but other outcomes from the Wave 5 R&D that are pretty interesting. So I'm really encouraging people to let's have an interactive session. So put your questions in the Q&A as we're going, and Stephen and I will try and address them as we go through the entire presentation. Stephen, off the bat, what is it that you're most looking forward to in terms of finding out about Wave 5?
You know, JP, I think I've said it a couple times in the AI Concierge newsletter. The scenario where we catch a stock as it reverses and starts its bullish move with the Wave 5 signal, and then potentially catch that same stock with a Wave 3 bullish signal. That is what I really want to see, and see if we can't catch a stock at the beginning of the move, use the ATRS trailing stop, and really grab as much out of that predicted move by the AI as possible with our call options.
Yeah, and I think you're going to find that the way this sets up, it really does lend itself to that. So that's quite exciting.
I do as
Now,
well.
switching back onto the Wave 5 signal, what I wanted to do, Stephen, was just start by talking about the Wave 5 signal itself. So putting the AI aside for a moment, what was the actual signal that we were training the AI to look out for? And cut a long story short, we've been doing this for a long, long time. And this Wave 5 signal, obviously, the first thing is you've got to look out for a Wave 5. So that's easy. And then secondly, you want to look out to see that the Wave 5 has extended down towards that tap box, which is the time and price projection. Now, it may not have exactly hit the target, but basically we want to see that the Wave 5 has extended to ensure that we've given it time to develop, and it's likely at a point where it can look to change trend, in this case to the upside. The next thing is we want to bring in the oscillator. So what we're looking for here is divergence. And so, it's that classic kind of indicator divergence. We want to see the pattern or the stock making lower lows. So in this case, you can see between Wave 3 and Wave 5, we're making lower lows. But conversely, on the indicator, we're making higher lows. So we're getting that divergence. And what that tells us is that the momentum in that wave is slowing down. Even though it's making new lows, it's doing so more slowly and we're starting to lose the momentum. So that's what we're looking for there. The other thing is that we want to make sure that this oscillator has retraced close to zero, at least 90% of the previous range. And you can see in this case, it has, right? Now, the next thing is the EBOT. So the EBOT is that little red line here. And this was something that I guess I created about 20 years ago. It's an Elliott Wave breakout trigger. And effectively what it is a measurement of two standard deviations of that wave 4 price movement. So if you take the total movement of price across wave 4 and calculate, I guess, a line of best fit through the middle and then take two standard deviations, what that would do is encompass 95% of the price action. So if we see price action that breaks above that channel, obviously the EBOT is only drawing, in this case, the upper channel rather than the full channel, then we can be reasonably confident that what we're looking at is a movement in price that is likely to be a breakout. It's giving us that first signal. And so from there, if that's our original setup, when we didn't have the AI, we do all of this manually, and ideally you would bring in some of your other indicators to try and confirm, and you make an assessment about whether you want to take this trade. And our experience was that over time, these signals were becoming tougher and tougher to get right because you get a lot of false breakouts to the upside. But as a target, what we would look for, and this is kind of Elliott Wave rules, is for the first movement to be to the previous wave 4. And so the question that we've been asking the AI is, okay, if we get these setups, can you tell us which ones are the ones we should take? It's really that simple. And as you guys know, the way we communicate this is through the confidence score. So I just want to, before we move on and take a look at the signal itself, I don't know if there's anything that comes to mind or any questions for you on that, Stephen.
No, I think the only question that I had there, JP, that was like kind of a common question was, and I'll admit, I thought the same thing. I thought wave 5, a bullish wave 5 was going to be the impulse move on 3, the retracement on 4, and then the impulse move on 5, finding out that it's a bearish pattern completing the wave 5 and then reversing. That's exciting, especially in the environment we're in right now. There's a lot of stocks that have been making new lows. So that's kind of like almost perfect timing, isn't it?
I think so. And I'll show you some data. One of the other outcomes that we discovered in the data was that as a breadth indicator, and what I mean is by the number and total score of this wave 5 signal, there's some value in indicating where a market is likely to, if not bottom, at least accelerate to the upside. So I'll show you that at the end because I think that's some exciting stuff that's come out of it. But to
Awesome.
your point, yes, I think it is quite timely that we've just had a significant pullback in the market. It needs to work itself out, but then we're going to start seeing recoveries. And this is exactly what this signal is looking for. It's looking for stocks that have been in a downtrend or have declined and are recovering. So it is quite exciting from that point of view. And to move on and talk about the R&D process, this is sort of the way we do it, right? So there's 3 main steps. So the first thing is the data preparation. And in this case, we were able to take about 30,000 signals that we have from the previous old school classic HUBB software and use that as training material for the AI. And then the second step is actually choosing the model, getting it set up and training it. And what we do is we take that 30,000 set of data and we break it down into, I guess, what you would call a training set, a validation set, and a test set. And what's really important to understand here is that the test set is kept very, very separately. The AI never gets to see that information. And a big portion of our test set was 2018 to present. So that last sort of 6 years. And what happens is that we train the model and then we give it some more data that it hasn't seen, which is called the validation set, to see how it goes. And we use that to iterate and allow it to adjust. And the key point here is iteration. This was a big exercise. It was harder than we thought. we came out realizing that we could find some real alpha or some value in the long signals. It was very hard for us to find some value in the short signals. They were very quick, and it's not to say that the process won't continue, but that's why it's just a long signal. And in fact, that iteration actually led to 8 models. So this wave 5 model, or this signal that you're seeing, is actually a combination of 8 separate models. You can see at the bottom, I've said they're ensemble models, or in data science, AI, machine learning parlance, they're random forest models, which are ensemble models, which means they're a combination of all kinds of different types of models. But I just wanted to give you that context to let you know that what you're dealing with here, again, I always like to make the point, this is not Chat GPT or something. These are specific AI trading models that we've spent a lot of time developing. And the reason that we're able to get the performance is because it is industrial strength stuff. It's not just a quick and easy. And that's, I guess, the value of being a founder, right? We're doing all of this research, we're doing all of this R&D, and this is kind of where we end up. So this one, I have to, we were hoping to have it to you guys in February, and we're now into April. So, it has taken an extended amount of time, but for good reason. And I think the results have also been good. So moving on, let's take a look at the signal itself. So this is obviously the one that came out very recently with RVMD. And to talk about the signal, it's very, very similar to the wave 3 signal. So you've obviously got a confidence score there. You can see this one is 73. And you've got a target. You've got a time frame denoted by the dotted lines. You've got a fail zone. What we've added is this entry window, which is the little blue square that you can see. And the intention there is to give you a target time zone and price zone that you want to enter these signals. So in other words, if the market moves up really quickly and gets outside of that window, it's not to say that you can't take the trade. But what's going to happen, obviously, is that you're going to dramatically adjust or impact your risk reward, because if you've already moved a long way to the target and we're still using the same target and the same fail zone, what you're now going to see is a situation where your potential reward to the target versus your risk is skewed. And so, Stephen, I know there's probably quite a number of questions, but it's really quite that simple. And, again, I'd invite anybody who's watching, add your questions into the Q&A or into the chat, and we can deal with them. But really, it's that simple. What we are suggesting, and all of the stats that I'm going to show you tonight, are based on entering these signals at the actual window in that period. All right, so
JP, I think it's going to be important to make sure that everyone knows that that's not to be treated as the same as the data scientists taught us about the fail zone, where if the fail zone is tapped, that signal's broken. If an entry is lower than 34.73 or higher than 37.13, but someone can get into that stock for 37.25 or whatever due to a move on the open or they were on the golf course, we're definitely not suggesting that you don't take a fill outside of that box. But in a perfect world, we're going to get our fill on our option while the stock is inside that box, correct?
That's right. That's most ideally, that's the area that you're going to want to try and enter the trade in.
Perfect.
All right. It doesn't seem like there's any real questions coming through at this point, so I'll move on. So what I've done is just off our dev server, because you guys, obviously, we've started adding the signals in from April, and we'll go back and populate the history. But I just wanted you to see some signals from, not too distant past, and you can see that it's been performing wonderfully. You can see in this case, it was a trade in ZTS. It was an 85 score right in the tap box. We got in with the entry window straight up and hit the target. And, similarly, this one's in JMBS. So Janus Henderson, same thing. Now, Stephen, as you were just talking about, you can see it did actually decline further, but didn't take out the fail zone and then came up and hit those targets. And
love it.
moving on, Western Union, similar setup, 83%. So all I just want to do is, because at the moment, you're not seeing a lot of green signals. The market is what it is. And that's something that I think, we've talked about a lot, is the AI, as frustrating as it might be to have a lack of signals while the market is particularly volatile. We've been through this over the last couple of years with these AI signals at a number of points now, probably 3 or 4 times. And in each case, we look back and say, wow, I'm really, really glad we didn't take a bunch of trades when the AI wasn't giving us anything, because the long and the short of it is it seems to be correct. And, if you're entering trades at the moment, it's going to be quite a challenging period. Let's say very least. You're going to get whipsawed around. You're going to have to really deal with some challenging scenarios. And so that AI giving us low scores is actually, it's a godsend. It is just brilliant. And I've had a lot of feedback, Stephen, I know you have too, just from clients who in retrospect are going, wow, I'm really glad that the AI is keeping us safe. So this wave 5 signal is going to be a similar scenario. There's going to be times when we're just not going to get a ton of signal. But the whole point is that we now have wave 3. We have wave 3 long and short. We have wave 5. And we're building more and more opportunities so that as we go, we will have signals reasonably consistently. And that is the reason why I will say that we're really excited to focus on the earnings signals next, because earnings, as you guys all know, every month, every week, there's earnings announcements. Obviously, there's some periods where earnings are heavy and we go through earnings seasons. There's other times when it's light. But if we've got signals based on earnings, we are going to put ourselves in a position to always have something to look at and always something to trade.
JP, now, I think that's pretty incredible. If you think about just that first 4 months after we brought the founders in August, we had 105 signals in the first 16 weeks of trading. And when the markets are moving, I think that as opposed to complaining about not having signals when the markets are really choppy or not set up, I think we're going to have a plethora of signals. And I've been saying that over and over. I think we're going to have a ton of signals in wave 3, not to mention now adding wave 5. When we start to recover here, we need to be ready, and we will be.
We've seen that a number of times at this point, right? It goes quiet. And actually, I was having an email exchange with Shane, who's one of our founders, and we were talking about, in this scenario, should we be looking at taking the lower scores? If I go back to this situation here, we're talking about wave 3, but it's the same point. This is a wave 5 signal that is rated 73%, right? So what it's telling us is on this day, which is the 14th of April, this stock has come up as a signal. You can see that the price action has broken above that EBOT, but it's telling us it's only 73%. Now, the question was, well, should we take these lower value signals when there's not so many other signals? And I think there's 2 ways that you can look at it. The first is, if you want to take a broader range of signals and you wanted to say, well, I'm going to take trades where the signal's down to 70. I'm not going to be strict on 75. You can do that, but you need to do that consistently across time when there's a lot of good signals or when there's a lack of signals, because the same way that the good signals are going to perform substantially in the good periods, so are the lower value signals, but the lower value signals are going to perform more poorly when there's a lack of signals, right? So if you're only taking the lower value signals when the other signals aren't there, you're probably taking them at the worst time. So if that as a strategy is something that you're considering, I wouldn't do that. I would be patient and just wait till there's good signals again, rather than taking poor signals when there's a lack of good signals. Does that make sense, Stephen?
It does, but I'm not going to lie, JP. If there would have been some liquid options in Revolution Medicine's ORD last night with that 73, I would have had a couple call options in there this morning. I might not have put it in the concierge, but I would have had a couple. But yes, it makes a lot of sense, JP.
I would too, Stephen, but my point is that you also need to take the 73s
All
when
the
you've got
time.
80s. Yeah, don't just
Yeah.
take them now because
I,
you're basically tipping the odds away from you if you think of it that way, right?
I love it. I think
So
everybody in the concierge knows I'm not afraid to trust the AI and get some of my money to work. That's for sure.
yeah, absolutely. All right, well, so that's there's one more signal that I think we hadn't looked at this point, but that's a signal in an ETF. So, and this is just at the beginning of the year. These are signals from January. So we've seen a lot of good stuff recently. We'll get this history into the platform so that people can look at them. Now, the next thing that I want to do is talk about the actual performance because there's some really good insights here. So basically what we're going to look at is a chart where along the bottom, we're talking about the score that the AI has given. So that's from 0 to 100. And then on the on the Y axis, we're looking at the percentage win rate. So based on the scores, what percentage of trades win? Now, when you look at the data and you look at it like a scatter plot like that, you can probably see a little bit of the trend there. But I'm going to add a polynomial line, and this is what it looks like. And here's the important stuff. So if we take 75, basically what we're saying is as long as the AI gives a score of 75% or greater, there is a 60% chance that the trade is going to go and hit the target, right? Now, when you look at the aggregate, so the average of all of those trades above 75, not just the ones at 75, then you've got a 73% expectation of a successful trade. So effectively, you can say the AI score comports or is equal to the expectation of a successful trade. So a 75% trade in terms of score, you would have a 3 out of 4 win rate. And you can see there how impressive that is, that the data is clustered like that above that 75. Now, there's a couple of other things to note here. What we don't have is the ability to trade against these, because you can see at the lower part, and I've got a chart here of, I'll come back to this in a minute. I'm just going to go to this chart of wave 3. This is what the AI data looks like for wave 3. And you can see it's got very similar expectation on the upper end, but at the lower end, it's got also a very clear expectation of it coming back and hitting the fail zone, which is why we can trade against it. Now, the maths for drawing this line here is exactly the same as the maths for drawing the line that's curved on this one. But it just shows you that we are not able to trade against these because we just weren't able to find, even with the 8 models all aggregating in, we weren't able to find anything that gave us confidence at the lower end of the scale. So for this one, it's a bullish trade long. The other point that I'll note is if you look at the relative number of signals, which is what's indicated by the orange histogram bar chart at the bottom there, you can see that actually there's a really significant weight of signals between 75 to 100. In fact, it's 33% of the signals. So we're not going to lack for signals. There's going to be quite a substantial number of signals in wave 5 that meet that criteria of 75 or greater. We just have to be patient.
I love it.
Now, there's a few questions there that we could address, Stephen. Just going back.
Yep.
Well, Jim's asked, where are we at with the wave 5 sell signals? It's very similar to wave 5 buy, but with puts instead of calls. So, Jim, the answer to that question is that with the AI model, we've just not been able to find correlations that are reliable in the same way that we're looking at this kind of data. So when we do all the modeling on the wave 5 cell, we don't end up with a clear or at least a substantial correlation that we could rely on. We just can't find anything that is as good a data as we would want to provide to you guys. We can improve it above 50%, but here we've got 73%. I mean, that's really good numbers. And with the wave 5 sell or the bearish signal, we're just not seeing that. So we'll continue to look at it, but at the moment, we're just not planning to do it in the short term. Bill is asking, will the same option delta rules apply to wave 5 trades? So the short answer to that is yes. I'm going to show you some stats in a minute, though, that talk to the timing of the trade. So we might save the answer to that question for that. Anonymous attendee is asking if we can go back to the RVMD chart and just talk about the gray color and the down arrow. So the gray color just says that it hasn't hit our 75 threshold. If it's 75 or above, it'll color it green. And the gray arrow that's pointing down is really just to point at the bar that's generated the signal, just to make it visually easy for you to be able to pick that out. So nothing really different than what we do on wave 3 there. Just jumping back to this one. Bill's asking, how much is the confidence score affected by a price or time outside the blue box? Can it be quantified? I'm just going to go back up to that chart again. So
JP, several people are asking, we've got several people asking, are we ever going to see the blue box on wave 3?
Short answer, yes, we will do that. So there's a number of additional data inputs that we've been able to give to wave 5 that wave 3 didn't have the benefit of. So we think that we can update, retrain the wave 3 model with additional data inputs and at the same time implement this kind of approach. So we'll be circling back to do that after we get these earnings AI signals out.
Chris is asking JP if with the blue box, he says it's interesting and it's kind of like would we implement Rob's 10% rule? And I think the answer to that is it depends on the stock. This is a $36 stock. In this example, that blue box is pretty wide in this case, but I never want to pay more than 15 or at the most 20% of what Rob's paying. What are your thoughts on? I know we don't have an exact formula, but just common sense, right? I mean, you don't want to, if you missed a trade, wait for the next signal is what I would say.
Yeah, no, he's dead on. He's right onto the correct concept. So this is very, very similar to what Rob's doing. Rob's talking the option price, obviously, not the stock price. So Rob's saying whatever my option cost of entry is, you shouldn't pay more than 10%. We are giving you that as a visual in relation to the stock price itself. Now, it's not calculating because it doesn't know which option you're going to get into, but the net effect is going to be similar. Whatever options are available at the entry signal, this is going to help you maintain your cost. That's exactly the whole point. You don't want to go and pay, anything too excessive because you're going to ruin the risk reward, which is what we were talking about earlier.
Perfect.
All right, just looking through a couple more of these.
Maria, JP just answered that. The blue box is showing the indicator for the underlying stock of the AI signal. We can kind of use that. If it's in that blue box, we know we're good to fire on our options as long as it meets our other liquidity bid offer criteria.
Yeah, I think, Stephen, a really simple way to think about this is, as you know, we have a lot of people saying, oh, if I miss the signal, can I still get in? And the answer is, well, is it close to the blue box? Yes.
Yeah, there you
That's
go.
really a simple way to think about it, right? The blue
I like
box
that.
is a time period and a price range that get in. If it's slightly outside of that, it should be fine. But if it gets too far away from that, you're really starting to put the odds out of your favor. And also, the signal is getting significantly away from the conditions that generated it. So the intent is that as long as it's in or close to that blue box, it's a go. And it's really kind of that simple.
Really interesting question, JP, that I didn't even think about myself. We get the length of the blue box for our, our ceiling and our floor for the entry. Does the width of the blue box have any, is that the period of which we should enter this trade? If it's past that, we shouldn't?
Yes, ideally.
That's a great question.
Yeah. So it's both time and price.
Love it.
And it's really predicated on the fact that these are the conditions that the AI has identified as being a valid signal. Once you get too far away from that, you're now looking at something different. All right. So I'm going to just jump back to the presentation here. So the next thing that I wanted to do was just this little comparison, which is sort of what we've been talking about. But what you can see here is wave 3 versus wave 5. And obviously, just want to make the point again that with the bullish signals for wave 3, you can trade with and against it if it has a low score, whereas wave 5, you don't do that. Wave 5 is just as long as it has a high score above 75, then that's an opportunity to go trade with it. In this case, the wave 5 won't color itself red. The signal confidence score won't be colored red if it's low. It'll only be colored red if it's an opportunity to trade against it. So it's going to either be gray or green. And if it's green, it's a opportunity. If it's gray, it's not. It's really that simple. And then the other thing that's important here is the timing. So this is going to play into our options discussion. So you can see that these are calendar days, but these wave 5s take a substantial amount of time to hit their target, both on the positive target and the fail zone. So that's going to play into which options that we're selecting, not necessarily in terms of delta, but in terms of time. And, I just sort of borrowed this from another presentation. We've talked about this. This was part of the profit dynamics. In these cases, if you're just playing with straight puts or calls or straight calls, they're going to be calls. I think you want to be looking well in excess of 90 days, right up to perhaps that 120 days. So I think that's an important thing to understand. The other thing that is interesting is that the average move on these is bigger. So, as we get more data, we'll zero in on this, but the wave 3s are only giving us kind of an approximate 6% on average, whereas it looks like wave 5 is going to give us something more around that 9% move. So there's more opportunity to profit there, even though it's going to take a little bit more time.
Move on. Go ahead, JP.
No. What, did you have a question, Stephen?
No, I was just going to say the move that was predicted on that RVMD trade was 19%. The underlying stock was predicted to move 19%. If we can catch a 19% move on an underlying stock, I can't even imagine what we're going to do with our calls.
Yeah, look, to be honest, I'm being conservative there with the 9%. Until we've sort of seen a little bit more data, but I have seen many well over 10%. And one of the things, we're talking about options. One of the things that I'm playing with is out of the money butterflies. And again, it's going to come down to option liquidity. But, if you can get an out of the money butterfly set up around the target, and I mean, with those kind of trades, it really helps maintain the costs because obviously butterflies are more cost effective. And it doesn't need to get within the, break evens of the butterfly to make money. As long as it's moving towards that butterfly, it's going to be profitable. And that some of those could be real home run trades. So once we have a little bit more data on that, we'll do a session on it just to show people. And
Awesome.
we'll also have the new option tools, which are going to make that kind of thing pretty well, I won't say easy, but it'll make it a lot more systematic or understandable about how to go ahead and set those kind of things up. So, I think this is exciting. I think we're going to see some really profitable trades out of this. And Stephen, on that note, I did mention the option tools earlier. So, I just took a screenshot of our dev here to show you that they're very developed at this point. What this allows you to do is basically select a strategy, and you can do all kinds of manipulation here directly on the screen. We've also built the scanners. At this point, we've built the scanners so that they will scan whatever you want to look for on an individual underlying stock. It will allow you to point at a place on the chart or the risk curve to find out which of these strategies are going to make the most money. Because that's the question, so many of our founders have, there's some guys that are real, I'll say, experienced, advanced option traders. And I'm talking some guys that can run rings around what I'm doing, like some really, really good stuff. But there's a lot of people who are, new to options. And what they're looking for is a tool that says, well, I just want to point at where the AI is saying it's going, and I want the software to tell me which option I should buy. And so that's what we've built.
I can assure you that that is music to the ears of several of our founders, Vince B. and many, many others. That's great. That's great news, JP.
Now, the next thing that I wanted to move on to was just other results from the R&D. And I'm talking about the R&D of Wave 5. One of the other things that I wanted to first mention, which is kind of exciting, is when we were training the Wave 5 AI based on that Elliott pattern that we started out with. And so what I'm talking about there is this kind of setup that we spoke about, and that's what it's being trained on. Obviously, the AI it takes all of this as the starting point, and then it looks at literally hundreds of thousands of other data points. It's got the macro model and a whole bunch of other things. And one of the side effects, or one of the kind of unexpected outputs, was that the AI actually identified something that we're calling a bullish reversal signal, where it has found that it can predict a similar sort of setup to this, but even when there's not a wave 5 there. So if it's a stock that's declining and it's not necessarily a wave 5 pattern, the AI has come up with another model, and we're just going through rigorously testing it. But assuming that all holds up, we're going to release that to our founders as well. So that'll be an additional signal over and above the wave 5. So I thought that was really exciting and pretty good news. But the other thing that's interesting is this kind of chart. So what we're seeing here is a score, right? So this is the total number, or the total score of wave 5 AI signals compared to the S&P. And as you can see, from time to time, there are some spikes that are pretty meaningful. And what we're going to do is try and refine this and build it into a dashboard for you guys. But there's going to be times when the number and the total score of AI signals is giving us some information about what the market's likely to do. And you can see in each of these cases where there's been a big spike, it's kind of been denoting, if not a bottom, certainly something that's a run-up subsequent. So we're going to get you all of this kind of information as well. And, we're looking at it a couple of ways. There's a number of ways we can do this sort of stuff, but I won't get into it too much. But that's over the long term. You can see the spikes in the total value of wave 5 are definitely some really interesting market intelligence that we can use in our trading. So, Stephen, I don't know if you have any questions on that. I won't spend too much time on it because it's not something that we're got to give to people right now, but it's something that will appear. We're building an AI dashboard for our AI clients so that when they log in, they'll have a dashboard of all the AI related stuff that makes it quick for them to access that. And we'll include this kind of information.
JP, I think the founders don't really even know. Like, I'm very fortunate that I get to be in those management meetings and listen to you and the data scientists talk. We did share that macroeconomic chart with the founders back probably about a month ago when it first turned red, if you remember. So I think that as you explain more what this is and what it means, and the fact that you're going to take this data and make this available to our founders, as they understand what it is that you're giving them, they're going to be, I believe they're going to be very, very grateful to have this data at their fingertips.
Yeah, I think you'll find that it's just confidence building. If you can see a
Yep.
massive spike in the AI scores, you're going to be on the lookout for, are we likely coming to a market bottom? And talking, about that macro model, let's have a look at that. That's where we are now. And I just wanted to include this for a couple of reasons. First of all, I think, it's good to be able to take a bit of a victory lap on the AI. It was spot on. You can see early up here in March, it identified that it thought that we were moving into contraction. And that was well before all the tariff stuff came out. And you can see, obviously, every time, and I think, if you look at this over a longer period, every time that the model turns either yellow or orange or red, then what we're looking at, obviously, is slowdown or contraction. And that has been very, very successful in identifying a period where the market has retraced or has at least been soft and traded sideways for an extended period. And the way it works is you can see at the bottom underneath the S&P chart are 4 separate lines. And basically that is showing the score that the AI is calculating for each of those individual phases. And whichever score has the highest value at that particular point in time is the dominant phase. So what's interesting at the moment, if you look all the way at the bottom to the right, you can see obviously the contraction score is significantly expanding and the expansion score in green is really falling off. You can see also that the slowdown score has started to increase as well. But, clearly this is part of what the AI is calculating and what goes into selecting signals. And, this is a big part of why sometimes there's just not a lot of signals, because it's very, very concerned about the background volatility and the overall macro picture. So, yeah, that's probably a good thing to end on. We can take some more questions, Stephen. Is there some more that we want to address?